All right, hi guys, welcome back to our weekly trading forecast for the week of 12th October to 16th of October. So welcome back. My name is Dylan, and over here I have JJ with me. So let's kick off with the dollar index as usual. So I'm going to share my screen right now. All right, so for last week, if we were to go to the daily charts for the dollar index, we're actually seeing that the dollar index is starting to resume its bearish trend, which started and kicked off since March 20th. March 2020 this year. So what happened is that we have seen the US dollar after it has been really oversold. It has already pulled back, recovered. We can see like there's two wave of a pullback all the way back to the top of this falling channel, which has lasted for like 7 months already, and then the price just kept being resisted, and eventually it fell, break below this riding channel, or what we call a retracement channel. Therefore, ending this retracement in a nutshell. Then last Friday we saw that the dollar index continues to fall and break lower. So right now it's starting to create lower lows and lower highs rather than higher lows and higher highs, which is very different from 1 month ago itself. So that may really prompt us that the dollar index is finally resuming its bearish trend. And if we look at the weekly time frame, just like back then in the past, in early 2017, when the dollar index fell and plunged all the way, reaching a low and pulls back, completed a pullback and continues to fall. So this entire pattern, right, I would say is pretty repetitive. In this case, it looks very similar. And right now we already have a very obvious significant reversal at the top of this channel, or resistance. So I think it may consolidate for another a week in the ranging mode, but it may not continue to pull even higher any further. But of course, we still have to observe, and after which it may really start to continue to depreciate again. So and therefore for this week, I think the outlook is to actually to continue to sell the US dollar, maybe as it reaches somewhere 92.6 and 5, 92.6.5. That's where maybe there will be some pullback in the shorter time frame. Otherwise, there's really a possibility that dollar has turned bearish. All right, next let's talk about the euro against US dollar. So very likely, or rather very similar to the dollar index, the euro dollar is starting to resume its bullish trend as well. So in the day chart, okay, last Friday as well, it actually jumped again, broke new high, created a higher high. Lows are getting higher as well. Price broke out of this retracement channel, which has lasted for about 1 month. So it's gaining ground again. And the price has also, emerged from this resistance turn support level, or support turn resistance level 1.1750. Quite an important level that signals to us that the euro dollar is going to resume appreciation from here. So in a smaller time frame, I think what we're going to do next is to find a entry point, right, to buy the euro dollar again. So price action wise, the first thing is we can use the trend line right here, the rising trend line, okay, that's been supporting the price. So we can just simply wait for the price pullback, right, somewhere back to the channel again, and of course back to the previous high turn support level. So that will be somewhere 1.1790. Right, we can consider buy the euro dollar again at this price, or otherwise we can wait for further pullback. If it pulls back even further to 1.1750 to buy euro dollar again. So this will be the plan for this coming week for the euro against US dollar. And I think for most of the dollar pairs, we are looking at a reversal in the making, and So we want to buy pairs against the dollar. So that's for the euro dollar, and right now I'm going to switch my time over to JJ to share his trading plan for the week.
First, we have this dollar CAD. So as we can see, dollar CAD, even after breaking out of this around 6 months trend line, it did manage to break above this level of interest, but after breaking above on a smaller time frame, we can see that it formed consolidating pattern. However, it broke downwards below the of interest, got resisted twice and started plunging because of dollar weakness. And with the last most recent wave, it actually managed to break below this this level, which was the previous breakout zone. So this week, we can see that we could continue selling dollar CAD at there'll be two levels I'll be watching out, which is one is this current level, or if it goes higher, then we could look at actually this previous level of breakout. So if price gets resisted here, there's actually more room for downside back to the previous low of the 6 month downtrend. Or if it does break above, then we could look to see if there is resistance here, we could look to sell dollar CAD at that level again. Next would be the pound dollar. So similarly, after breaking out of it's also a 6 month trend line, it got supported at the next trend line, which is this level here. And afterwards, you can see price started turning bullish, and it actually formed this reverse head and shoulder pattern. So actually this week, I'm also looking to buy the pound dollar. We could see that after price got supported at this level, this trend line, it started forming a new trend line on a smaller time frame. So if we could wait for price to retest this trend line, this level, which just nice coincides with the neckline of the head and shoulder pattern, I think this level around 1.2985 would be a good level to buy pound dollar should we see some support here. And we could definitely look to buy pound dollar back to this previous breakout zone, which is an inside bar candle, it's a doji candle. So I think that if price does get supported here and breaks above, the next key level of resistance would be at this level of about 1.3 to 5 to 3. Yeah, the two pairs that I'll be focusing on.
All right, thanks JJ, especially like the pound dollar analysis. I mean, technically there's inverse and shoulder, and at the same time, last week has shown us that the US dollar is starting to weaken again. So I think buy the pound against US dollar is a pretty good choice for this week. So just need to wait for pullback and try to enter, try to buy the pound against US dollar. And honestly speaking, pound wasn't really weakening for the past few weeks. Yes, pullback. There's multiple attempts to to reverse that action, but obviously the lows are getting higher, highs are getting higher. So everything points to a short-term bullish pound against the US dollar right now. So definitely that's a good choice. All right, so next, coming back to my screen, next I want to share the gold. All right, so the gold last week, something really interesting happened. In the day charts, you can see that there's a orange trend line right here. And finally, last Friday, the gold has broke out of this falling trend line. So reversal of a bearish structure, short-term structure, into a bullish one for now, or into a ranging one. So that definitely prompts the gold to continue to, in terms of price action, to continue to climb further. We've seen support at 100 moving average as well. So right now, if we finally see the price, standing above or breaking above all other moving averages. The ones I have right here are 55 and 20. That definitely shows a very bullish sign. And for the MACD as well, an indication, if you see the lines cross above the 0 level right here, and the bulls are building up, the buyers building up, then it shows a sustainable bullish trend for the gold as well. So this week will be pretty crucial. But if we talk about historical action, back in 2008 and 09, which is somewhere right here, right, when we saw that the gold, after the 2008 financial crisis, gold climbed, finally we broke a new historical high, and it makes a very strong pullback. Okay, in any case, it's a characteristic of the gold to actually, usually after a trend, it will usually range for about 90 days. That's about 3 months. So as you can see right here, about 90 days, 3 months of consolidation, or rather pullback, okay, 2 to 3 months time, the trend start to reverse, and eventually it just continues to trend higher. So what we have right here, right now, for the gold is the same thing is happening. So we've seen the gold pulling back, okay, since early August. And right now, it is already 12th of October. So that is 2 months, slightly more than 2 months. So within the next 1 month, we are most likely going to experience a little bit of a range, but probably the low will start to pick up higher. And of course, high may continue to become higher, or it may just consolidate in a sideways manner. But I think we can start to look for bottoms for us to buy the gold right now. If this trend were to continue, and I think fundamentally speaking, long-term view on the gold is that it will still continues to appreciate in value. So the technical breakout right here is the very first sign that we are seeing that the gold will turn bullish. So in a shorter time frame as of now, we can just wait for the price pullback somewhere back to about 1917, so about 1912. I think that that price itself provides some price action for us to buy the gold again. It may continue to pull back even further. You might even just want to rely on a trend line that's forming right here. Right. I mean, if this is what you're looking at, then there will be a much lower price somewhere back to about 1,009, slightly above it. Yep. So, but in any case, that is the outlook for the gold right now. Yeah. And next, I want to share about one pair that I have been trying to observe for quite some time, which is dollar against Japanese yen. I think right now could be is a pretty good timing to actually sell this pair. Since that we now see that the US dollar is weakening, and if the dollar were to weaken, and if the risk sentiment is still lingering around, I think there will still be demand for safe haven assets. And if the dollar is not the choice during this period of time, Japanese yen could very well be one of the best choice apart from other safe haven assets such as the gold. So I mean, one thing is that for dollar yen, we have seen that ever since it reaches a low at 104, it has already pulled back very, very significantly for quite a period of time. I mean, since September 21st, right now is October, so about 1 month. Yep, about 1 month time already. So and right now we are seeing some resistance just in the day chart, right, just before the 100 moving average. So it pulls back all the way into the zone between the moving averages and started to reverse right here at this very important level, a supply zone, I would say, at 106. Trendline wise, if we are to actually just connect the trend line from this high, right, then we are seeing actually the price is being resisted by a trend line and started to fall. And I think very important as well, last Friday, But actually today itself, the price has finally broke below this rising trend line as well. So that gives us a few signals that the dollar against Japanese yen is about time for us to actually look to sell this pair. And in fact, in terms of wave analysis, we can see that this is the first rebound, right? Price pulls back, okay. Second wave and the third wave. The third wave itself, okay, it goes all the way up, pulls back strongly, right? Just before it comes back to the previous high right here, it forms the last wave, and finally found resistance and started to reverse. So, which is why I do believe now is a pretty good timing to sell dollar against Japanese yen. Stop loss just right above 106, and target wise all the way back to 104.6 to 104. So that's my plan for the dollar against the Japanese yen. Right, something I've been watching for quite a period of time. And last but not least, just going to talk about the US30. Nothing much about the US30, but I think what's quite clear right now is that it has resumed its bullish trend. I think mostly is due to that the market does believe that the US government will provide more stimulus package, fiscal policies to support the US markets, the US economy. So that's going to help support the stock market. In any case, the price has already broke out of this falling channel since last or 2 weeks ago, and we are seeing higher lows and higher highs as well at the same time. So there is very little doubt. In fact, it's also being supported at 100 moving average once again. The last time it was somewhere in June. So I think this is going to help bring the price back to the previous high and probably back to the historical high again. So nothing really much to talk about. If you are bullish on the stock markets, you can continue to wait for pullbacks, small pullbacks. In this case, at least somewhere at 28,500 would be pretty good to buy again. Otherwise, somewhere at 28,300 to buy the Dow Jones in this case. All right, so that's pretty much for this week. In terms of news, we have the Aussie employment change. US is the retail sales. Today is still the bank holiday for the US. So nothing much. Of course, tomorrow we have the inflation for the US. That will be quite important because the central bank, the Federal Reserve, is very particular about inflation right now. So that's something we have to watch out for tomorrow. So I think today we can just observe a little bit more because since it is US holiday as well as Canadian, volatility will be quite low. But if there's good price to enter, you can always build a position first. And I think the market will really start to move on Tuesday itself. All right. So with that, JJ, do you have anything else you want to share?
Oh, that's all for me.
Okay. All right. Thanks. Thank you for watching, and yes, we'll see you again this week. All right. Thank you very much.